Hello everyone, today is July 31st, so we're going to go over how our portfolio did in the month of July. So we can see that we're currently at $20,597.77. Highest this portfolio has ever been. It's a little bit of a recurring theme these last couple months. Good feeling, but brings weariness. So let's look at some results and get into it. In the last day, we were down 0.47% during the day and then down 0.13% in after hours, which is really interesting because to start the day, we were up 1.37%, which would have put us over $21,000 in the account. So that would have been a high note to start the video on, but it seems like after earnings and all that, everything started to slip come the investing day, and I think that's just because there's been a lot of gains lately, so it makes sense. If we look at the last week, down 0.36%, but about trading even. If you look at the month, we're up 2.68%, which is great for a month. Never complain about that, so very happy. And that represents $538.18 worth of a gain. Look at 3 months, we're up 15%. Year to date, 10. Look at a year, that's 18. And since we moved over to Robinhood, we're up 23%. So some really good numbers to look at. It gives me some optimism, especially when you look at these low points in the middle of April, how things were looking. Adjusted what we had in the account, we were at like $14,000, so a lot better. If we look at some of our holdings here, we can see that we got QQQM, and we got 54.13 shares. In VU, we got 13.83 shares. And if we look at our equity, QQQM is $12,568, and VU is $8,029. Contributions, we have a IRA match of $36, and that's because we've contributed $1,200 so far since this tax year, so that's been very exciting. For this year, we're on track kind of max out on the account. We'll be shooting under, but we should be good at the end of the year. Just put in a bulk deposit to fill up the rest of our difference. We're first year maxing out, so really want to hit that. So $5,800 more dollars to go until next May. So let's do that. But we can see last year when we moved over at $2,900. So I think we're on pace to definitely doing better than last year and keeping up with that. So some stock news that we have for the month. Theme was that tech just kind of blew everyone's expectations. So we had a lot of results this week. So first, let's look at Meta. You can see in a week they were kind of trading even for a while. They're even down 2%, 3%. And then they had earnings report, and you went from being down 3% to being up 8%, 11% difference. And now for the week, we're up 8%. So quite interesting. And this is just because they had 22% year-over-year growth in revenue, which is just very strong, beat expectations. So people love to see that. And I think when it comes to tech stocks, we get worried that they're kind of getting these lofty valuations for no reason, and they're just kind of overvalued. But then things like this happen and kind of brings us down to reality, like, hey, they have the earnings to support it, and that's why they're going up. If we look at Nvidia, I think this has the biggest news so far. It hit 4 trillion in market cap, which was the first company in history to ever do that. Absolutely insane. I know we had our stock valuation on Nvidia a while ago, and we were saying its fair value at about 130. Clearly, conditions have changed, and they're trading at 177. So that's good to see. If we look at a day, down about 1%, week up 2.59. But the month, they're up 13.67%. Nothing to scoff at. And then as you go further and further, it just seems like it does better. So this company has continued to exceed expectations. The demand has not slowed down. It seems like people and companies are finding ways to be innovative with AI and drive revenue. So with that, hopefully that continues up their revenue stream. So very proud of that company. That's incredible, hitting 4 trillion. And speaking of it, Microsoft also hit 4 trillion today. So 2 companies breaking that record in 1 month. You can see that Microsoft is up about 4.5% today. Week 6%, month 7.81%. Keep going. It just seemed like it kept going up. So Microsoft has been on a tear lately. And again, no, just strong earnings that came out recently with it made a jump in price, and that has a lot to do with Azure, which is, I believe, their software cloud aspect of their business. So their cloud procedures have been growing. Revenue has been very strong on that. People love to see that. Some other news that we had going on in the economy, in terms of tariffs, we had a lot of tariff news come out this week because the deadline's approaching. 90-day pause on Mexico again, so they'll be exempt from tariffs for another 3 months. I think a lot of people saw that coming. I think we talked about Trump always chickens out the taco trade in the last video, the one before that, where he seems to backpedal on a lot of this. So Mexico's no exemption. Look at India, they got hit with a 25% tariff, which is pretty steep. EU 15%, and Japan 15%. It seems like 15% is kind of the baseline that he's going with. So in future deals, expect at least 15%. China is still being negotiated. We still have to see what comes out of that. But again, at least 15%. I won't be surprised. Maybe China could push the 10 out of him, but it's steep regardless. I mean, that's something that will bring inflation, which is a good transition because Jerome Powell, head of the Fed chair, held rates steady again this month, which to most people wasn't a surprise. I think to a lot of people that are politically motivated, it might have been a surprise because Trump has been relentless on him, and you think that would influence him to lower rates just to stimulate the economy. But in my opinion, and a lot of people's opinion, to be quite frank, the economy needs rates to be held still. We still need inflation to come down, and that's because CPI recently came in at 2.7%, which is still well above, although only 0.7%, well above inflation. If we want to keep up with wages and purchasing power, you need to keep inflation down. And 2.7% is bigger than 2%, and it's not even close, really. So inflation is sticky, still working on that. Tariffs really aren't helping that case. So Jerome Powell, I won't be surprised if he just, held it again next time. We'll see though. But something that works in favor of cutting rates, unemployment came in at 4.1%, and that's down from 4.2% last month. So too small of unemployment can be a tough thing because that means people need jobs and are getting a little overworked. But at the same time, you don't want too high of unemployment because that means no one gets jobs. Historically, 4.1, 4.2 is great. I think as it goes down, maybe get slightly more concerned, honestly. But for now, it's a pretty strong number. So yeah, people are saying resilient in terms of working and finding jobs, although some of these numbers are skewed probably by gig work. Still something to keep in mind that job performance in terms of people having jobs is doing well. Wages and compensation, maybe not so much, but in that terms, the economy is doing okay. But in terms of something like inflation, not so much. So let's finalize with our investing account for the month. We have a lot to look at here. So if you look at our portfolio, we'll see kind of what we're talking about. July 21st, ended the day at 20,623. If we're going to comparison numbers here, we have contributions of 13,700, and SPY in comparison would be at $20,089. So if we look over here, we get some information regarding those numbers. We can see our portfolio profit over time, and we're currently sitting at $6,877. Absolutely incredible. I have no gripes to that number. Very happy to see that. Being up almost $7,000 feels surreal, especially considering we were down to up 3,800 when times are getting a little tough. So very happy with that. And we're going to look at the difference in our account here. We'll see that we're outperforming the SPY, the general market, by $533, which is up from $397 last month. SPY and QQQ both did great this last month, but QQQ, and kind of related to those tech earnings that we were talking about, it's just been going crazy. So we love to see that. That's why we took that 1.2 beta compared to the 1 provided by the market, hoping to see that excess return. And so far, it's definitely playing out. Something else that we can look at here is our positions, and we have QQQM and VU, the numbers that go with that. Great, strong numbers, and we kind of talked about the performance over time. 59%, and that's not even considering the fact that we invest continually over time, so wasn't just a one lump sum. The market's been up incredibly since I turned 18. I started investing. I think we're coming up on 5 years here, so pretty intense. And then we look at the position weight in our portfolio. This is in line with what I want. I want a 40% exposure in VU and a 60% exposure in QQQM. So my contribution matching, I've been staying steady up on that in VU, trying to get that just closer to the 4%, especially as QQQ can tend to run crazy when earnings are coming out and tech stocks go crazy. So love to see that. We had our close positions we talked about in the past. great buys in general. Even Google, which did 3% over that time annualized, I still thought was a good buy for the market condition. Now, if we look at our predictions, we had another one. Again, this is very small, and it's because I'm kind of in the beta phase of just analyzing the corresponding charts that Robinhood will allow me to make predictions, bets on. But what we did bet on was the gas prices for last month, and that came out today. I think it was at like 3.14 nationwide, and I did estimate it would be in the range of 3.1 to 3.2. It fell in that, so we were paid accordingly. Again, very, very small scale stuff. This is just practice. If I could continually, I don't know, make good estimations off of data, and I would have an edge in the market somehow, I think this would be fun to continue messing with. But so far, having a great time. Don't know what it says. Mine's 100% annualized. That's not quite accurate, but we're doing great. I mean, we're up $8, and I mean, if you see these annualized returns, let's maybe adjust that. Yeah. So I mean, if we look at the annualized returns we've just done, absolutely crazy. I mean, yeah, there we go. So that's why. I mean, if you look at these like annualized percentage returns, they just get kind of outlandish. So we make some good investments, I guess, in that time being. As long as that number is above the S&P, technically, I'm spending my time well. So these outlandish percentage values, I'll take. No complaints. As a bit of a recap, another strong month out of our portfolio. Very proud of it. I think where our head at is it's at a great point. Come mid-month, I'm going to do another stock review on a stock I'm interested in. If I find it undervalued significantly and an enticing buy, I'll buy into that. However, if I don't, I'm just going to stick with the strategy that I'm already doing, just broad index funds, working that way. More exposure in tech stocks through QQQM rather than QQQ because that's a slightly lower expense ratio. So we're just going to keep sticking with what's working. I mean, a lot of news is coming out. Market conditions have just been going insane lately, but nevertheless, thank you for tuning in. I saw my SoFi video did quite well, and I hope you guys like this one and tune in for that next stock review. Take care.